Hey, welcome back, options traders. Well, a good question that I get from traders a lot: how much can I expect to earn from selling options? And the reason that traders ask this is they hear all kinds of myths and misperceptions about the market. One in particular, that 90% of options expire worthless, which we've talked about before. Definitely not true. But they start hearing this stuff about you can sell options, you're just collecting all of this money. And it seems like as long as you keep doing this, that eventually you're bound to win. Well, I've talked about this in various aspects in previous videos, but I want to show you specifically what you can expect to earn from selling options and why. So let's go have a look. And as always, before we do, please be sure to click like and subscribe. So the answer comes down to this whole concept of fair value. And I do have other videos in this forum talking about different aspects of fair value. But the basic idea is that fair value is the price at which the buyer and seller are expected to just break even over the long run. That's important. Doesn't mean that on every single trade, traders break even. In fact, most of the time they won't. But on average, that's what should be expected to happen. Now, why is that? Well, if the price is higher than what we perceive to be this fair value, nobody's going to buy. Would you buy if you thought this option was worth $5, but they were charging you $5.50 or $6? Of course not. So they can't charge you more than what people perceive to be fair. Conversely, if the price is lower, then who's going to sell? Nobody. Again, if you think that the price is worth $5, that's how much you should receive for selling the option. Would you sell it for $4.50 or less? Of course not. You'd say, nope, I'm not going to be a seller. So the agreed upon price, whenever a trade is placed, that at least theoretically, both traders must think that that is a fair price. So what is that price? Well, we've looked at this before. So let's say that we have 10 numbers, maybe drawn on pieces of paper, and we're going to dump them into a hat. We're going to draw a number out. And so the way that the game works is this: if you draw the numbers 1 through 8 in green, you are going to win $1. If you draw a 9 or a 10, you lose. But in all cases, whether you win or lose, there is a fee that you must pay, very much like an options market or the stock market. If you buy an option for $5 and it pays off, you don't get your $5 back. Now, that's not saying you can't recoup it through intrinsic value, but it's not like the OCC comes back and says, oh, by the way, here's the premium that you paid. That always goes to the seller. So there's always a price that you pay each and every time that you play. So let's say if you draw the numbers 1 through 8, you're going to win $1. How much is this worth? What's the fair value? Well, it's very simple to figure out. We have an 80% chance of winning. So 80% times the dollar prize is 80 cents. And what this means is that if you paid 80 cents over and over hundreds and thousands of times, you would be expected to just break even. Now, of course, again, on any single try, you're either going to win or lose. But over the long run, you would expect to just break even. So to visualize it, here's the way that the math works out. Here's our, let's say, first 10 tries. And let's say that the probability works out perfectly, that you win 8 and lose 2. Well, in all cases, you're going to spend 80 cents. And that means the total price that you have spent is $8. How much can you expect to win? Well, you should win on average 8 out of these 10. So you should pick up $8. These you'll pick up 0. And so that means you're going to collect 8. So look what's happening. You're spending 8, collecting 8, and that is an expected value of 0. And there is your answer. Whether you are an option buyer or an option seller, not counting commissions, the expected return is 0. So you can see that in this example, if you were charged 85 cents, it would cost you $8.50 to expect to return 8. That would give you a loss of 50 cents every 10 tries on average. And that means you're not willing to spend 85 cents. On the other hand, what if it were 75 cents? Then that means you would spend $7.50 and expect to collect 8, which would give you 50 cents every 10 tries, which would be a great deal for you. And again, that means the seller is going to say no. So the only way this game is going to take place is if both traders agree to buy and sell at 80 cents. So the thing to understand about this question is that the market price that you see for the buyer, the price you pay is the amount that you can expect to earn. So a lot of times people go, why would I want to be the buyer? Why would I want to pay $5 for this option? Well, that's the expected payoff. And that's exactly why it's going to have that market price. What about for the seller? For the seller, the price you receive is the amount you can expect to lose. So see, it's a different perspective. Everybody thinks, again, that collecting all of this money is just money raining from the sky, that it's just free money, keep selling, and you'll just come out a winner. Well, the amount that you're receiving is exactly the amount that you're expected to lose. So there's a number of points to take from this. Probably the most important is to don't just go on a trip of selling options because you think it's free money. If it falls into your plan for hedging purposes, or if maybe you could look from historic volatility compared to implied, that maybe there's a really good expected edge here, those are different stories. But you don't want to just sell options because you think it's free money. So whenever I hear people asking, well, how much can I expect to win by selling options? It tells me that they've been hearing something about, oh, go out and sell options, you'll make all kinds of money. And the answer is very simple. The amount you can expect to earn in the long run is zero. And that's why if you're going to incorporate option selling as part of your plan, there has to be a better reason other than thinking it's just free money. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.